Happy Friday, traders. That's right, it's Friday. This is Jeff Kohler, aka the Option Addict from optionaddict.blogspot.com, and not only is it Friday, but it's also a very unfulfilling trading session. We've got a chart of the Dow Jones up here, and you can see we're up today, which is good. We're drifting higher, and that was kind of the anticipated movement we had for the week. But I'm not here to talk about the market, because of course there's not a lot really to talk about. Fridays I usually like to take the time to go over a strategy or a concept relating to trading to hopefully help to teach some of the others out there. And recently I got an idea to go and do a video on trade entry. And that's what we're going to talk about today. Now there's two things I want to do before we get started. Number one, I want to talk about the selection process, because there's got to be a reason for every trade that you take. You don't just jump into any given trade because you've got a green arrow or you've got a trend. You have to have some kind of a story or a reason of why you think that trade is going to work out or move in your favor. Why are you going to make money on the stock? You also, before you evaluate anything else other than your reason, you need to understand the risks involved. You need to go over every possible scenario and evaluate this strategy or this trade based on worst case scenario. And if you're comfortable with assuming the worst case scenario, then it is a good trade and it's suitable for you. Next, you're going to look at the reward and make sure that, well, for the risk that you're taking on this idea, well, make sure the reward is good enough to pay you for it. And then, of course, you got to go over your stock preferences. I mean, that's the selection process we talked about. But your preferences in each stock are going to be things like, well, how good is the recent momentum, or how much do you like the angle of the trend? Is this going to be a good enough trend to take the stock higher? Is this stock volatile enough to produce enough good gains, or is this just a I normally kind of bag on some of the Dow component stocks, right, or utility stocks, because there is no directional movements in stocks like that. But yet at the same time, I'm looking at stocks like we're watching casinos lately, or realty stocks. They're making 20% movements when they move. Yeah, I'm all kinds of comfortable with that. That's a good thing. So that's some of the preferences I deal with when I go through the trade selection process. You also might want to look at liquidity and how actively traded your stock is, and how rich the volumes look, whether it's easy to get in and out of them or not. And then also, of course, if you're going to be trading options, which ultimately that's what we're here and that's what we're doing, is you're going to have to ask yourself a couple of questions like, number one, where's the stock going? And number two, how long is it going to take to get there? So all of these things in the process should help you to get a good trade on your radar. That's the selection process. That's going over your preferences and finding a good trade. But now when it comes into actually taking the trade, that's the easiest part of what we do here. Anybody can take a trade. As long as you're confident that you're going to be able to sell this trade for a higher price or a better price than what you paid for it, take the trade. But now there's some good ways to create rules around where you're going to enter a trade. I'm going to go over a few of them right now. Let's look at a few stocks. And for those of you that if you've listened to me for quite a while, I usually take two types of trades. Stocks that are breaking out of resistance, breaking below support, bouncing off support, or bouncing off of resistance. So I got a couple ideas we'll look at here today. First, I'm going to start off with ticker symbol REG. And if you look at the chart here, you can see that the stock is a downward trending stock. Lower highs, lower lows, and right now it looks like it's making a lower high. And you can see this is right next to a prior low. Now there's two things you can focus on here when entering a trade. Number one is you take an anticipatory approach, which means you don't really have confirmation or you don't really have a whole lot of evidence that your idea is going to work out, but you're comfortable taking it here because of course the reward means that you're in that much earlier and you've got that much better upside. Or you wait for confirmation, and a couple of ideas we can talk about there. Now, I base most of my entries on support and resistance, to tell you the truth, because I figure if a stock really adheres to these levels, then that means I'm finding the tops and the bottoms of that trend. So, for example, if I zoom in here on Regency Centers, the sheer fact that the stock has worked its way all the way up to this resistance level, which comes down from an angle diagonally and horizontally, to me that means I'm going to be comfortable taking that trade right here, right now. All right? Now, when you're entering a trade, my preference is that when I get into the trade, I'm standing right next to the exit, if you know what that means. So the same level I'm going to exit at, if it breaks above 74, I also want to enter at, because that means I have very small risk in this trade. It only has to close a few pennies higher, and I'm out. I'm done. And that to me is a good entry point. Now I can use things like confirmation. Well, let's say candle patterns. If I'm waiting for a confirmed candle pattern, I can wait for the stock to break lower or confirm some kind of a candle, which we don't really have anything like that here on Regency. Also, I can work in a technical indicator. Let's say I'm going to use a stochastic, and we talked about this the other day, slow stochastic. I'm going to add that. And let's say I edit this study, because the crucial thing about adding an indicator is you don't just use the default method. Okay, you use whatever time frame suits you. If you're a trend trader, yeah, maybe you stick with the 14.5 MACD or the 14.5 stochastic. But if you're a trader that's in and out of trades, swing trader, very, very short term, what do you want to be in a trade for that long for? Take the stochastic here over recent periods of time. What I did was I cut the average time frame in half to a 7.3. And let's say you're playing some crossovers. Last time you were at resistance on this stock, you can see the crossover occurred right here, right about here, which would have told you to get short this stock. And as it gets short, you buy back on the next crossover, which would have been only about 6-7 days later, but it was a pretty good profit within the stock. Or maybe you adjust them to be a little bit longer. Find a time frame that's suitable for you. But use an indicator. And honestly, I don't care what indicator you use. Most of you know I'm not very wild about these anyways, because they're all pretty much the same thing with different names and slightly different algebra or calculus behind them. But use the crossover type methods on some kind of an oscillator like you see here with the stochastic. If you like the MACD, whatever, I don't care. Use whichever one you want. But it's going to be a good confirming indicator. You can also use price as a good confirming indicator. And when that stock starts to rally downward off of resistance, you've got a pretty good trade going there. Let's look at this from a bullish perspective, and let's talk about MLM. If you've followed me on this stock on any of the last 10 times we've tried to trade it, let me delete all these. Most of the entry points have been right at or very, very near support. And that was essentially the reasoning behind talking about this as a trade as of recently. So take your entry very, very near the exit. If you took an entry here right now, you can see we're right at the exit. If you took it recently, we're, again, sitting right at that exit level. If it breaks below, then you exit the trade. If it doesn't work out, that's okay. But as long as you're setting up a trade so that you don't have a lot at risk, that's the whole underlying point. Let's also talk about trading breakouts. Because the breakout itself is kind of a price confirming indicator, right? And Golden is finally breaking out today. So the breakout is a trade where you can see that any sellers that were in the stock are getting cleared out now. You're triggering stops left and right. Sellers are becoming buyers. Everybody's getting involved. Volume on the stock today is huge. This is a great scenario, right? But you have to plan your risk. You're in a situation like this, naturally you're getting in further away than your exit. And the exit here, of course, would be that old resistance as new support, if I highlight this level. A close below that would mean I get out of this trade. Now I want to get into this trade as close to that level as I can get. And by sheer virtue that the stock is breaking out, up 7% today, I'm not going to be very successful at getting it close to $60 anymore. It's hard to see this coming. If you took this in anticipation, totally different story. Now what you got to deal with is your risk factor, because resistance all the way back down here at 61. If you got into this trade, you're going to be risking about $4 to the downside. Wow, that's pretty tough. I don't like to risk that much in a given trade, so maybe you wait for it to consolidate a little bit. This is when you're entering breakouts, you do have to make sure that you are somewhat close to your exit point, and in this case, it doesn't work out. So maybe you wait for a retest of that old resistance as new support. So those are a few things I want to talk about as far as trade entry is concerned. Those are kind of the fundamentals behind it. Remember, anybody can enter a trade. It doesn't take a whole lot required. What's important is that you make sure that you're going to be able to get out of that trade at a better price than what you paid for it. This is Jeff. This has been a good week for everybody, hopefully, and I wish you guys the best this weekend. Enjoy yourselves, get some time away from the computer, and hopefully you'll catch me back here next Monday at optionaddict.blogspot.com. Thanks a lot, everyone. Have a good weekend. Bye-bye.